looking forward to kind of going over the new scanner, right? The updated scanner. We've made some really cool additions that I think are going to be very helpful. We probably don't need to go too long in this call. We did chat about this briefly this morning. I'll go over a few more details and some best practices on how to use the scanner with these new additions, which I'm really excited about. I've already been able to profit off of a few trades at the beginning of this week, and I'm looking forward to taking some more trades as the week goes on. So we'll also talk. We'll probably end on that, just kind of looking at some trades that I think with these new updates the scanner is providing right now. So that'll be great. But let's go ahead and get started. As always, I need to remind you guys about the risks involved in this market. You can lose all or more than your initial investment if you're not careful. So please be aware of how many pips you're risking on each trade, in addition to how big your lot size is and ultimately how that would affect your account if you were to lose money. So make sure that you're going through that process each and every time that you take a trade. All right, guys, let's go ahead and jump into this. So let's go over to the scanner. First things first, right? So I'm going to pull up Steve's scanner and show you the new additions. I'm sure all of you, if most of you, if not all of you, have seen this so far. But yeah, this was added over the weekend between Saturday and Sunday. We got new data put into this on Sunday, which was great, and everything seems to be functioning perfectly. So I'm happy that it was pretty seamless. Really not a lot of issues at all putting this together. So I was really happy because anytime I change something, I'm like, oh man, I hope I don't mess something up. But no, it was super easy. So, um, moved a few things around too. You'll notice on the scanner, we moved the crowded market alert, which used to be on the very right hand side of the scanner. That has now moved to the adjacent to the long term signal. Okay, so that's now here. Nothing as far as the crowded market indicator has changed. It is exactly how it was before. The only thing different is it's moved. And the reason why we moved it right here was so that it could be adjacent, kind of married to this long-term signal. So the crowded market indicator has everything to do with the long-term signal. And so I wanted to make sure that they were adjacent to each other. So for those of you that are looking for long-term directions in the market, this is your key. Okay. And you'll notice when the crowded market indicates 5 out of 5 stars, that means that the long-term signal is going to issue a strong buy or strong sell. So we're pretty darn confident about the crowded market indicator being accurate as far as the long term goes. It's not a great indicator as far as figuring out where the market's going today or this week even. But I wanted to include this. We added the crowded market indicator we've had for like 10 months now, but it's been one of my favorite indicators on the scanner, as you guys know, because it really does. I mean, if you guys, I don't know if you haven't followed it yet, but um, just watch each one of these pairs, and nearly all of these, if not all of these, will in fact go in the direction and make 500,000, 2,000 pip moves in the long-term signal direction if you just give it a month or two, right? Like it's really remarkable how powerful that actually is. Um, so I love that. So I wanted those to be together. Another change was we've moved the 3 week shift and the 5 week shift to be in order. This was kind of out of order. We used to have the 5 week shift over here on the left side and the 3 week shift over here on the right. We've just kind of flipped them so that they're just kind of in order now. So you've got kind of more of a shorter term signal over here on the left side, and then you get kind of more to your longer term stuff as you go right and into the middle. Then you got the sentiment corridor, which is over here on the very right side of the scanner. So these last 3 columns are connected to each other. So you got the sentiment signals right here, and you've got the long term, or not the long term, you've got the long short, the ability to filter by long and short positions by retail traders. So when you click this up and down, this just basically tells you where the retail traders are standing. You know, are they, you know, right now in the USD franc, it says 91% of retail traders are long and only 9% are short, right? And then you can filter this the other way. So you can be like, okay, on the pound Aussie right now, 79% of retail traders are short and only 21% are long, right? So you can kind of filter that as you go through, which is kind of fun. Yeah, you can look at you can look at each currency pair from every detail and every line item that you'd want to look at a currency pair. Like where are they as far as sentiment? Where are they as far as the crowded market? Where are they on a long term or shorter term basis, right? Okay, so then this is the new thing, right? This is the new guy on the block. I was saving this for last. So this is called the crowded right. I don't have a really good name for it, so we're calling this the crowded shift alert or crowded shift alerter. And it's very similar to the crowded market alerter, but this is more of a shorter term crowded market. Okay. And basically, what this guy does, and I love it, I love this, what this does. It basically analyzes the 3 week and the 5 week shifts. And it says, okay, if the shifts are abnormally big, bigger than the normal threshold, what you would see in a shift over a 3 or 5 week period, if those shifts are big, beyond what you would expect them to be, we're going to issue what we call a crowded shift alert. When you get 5 out of 5 stars, or even 4 out of 5 stars is getting up there. And these are currency pairs that are likely going to receive some kind of reversal against what the banks have done over the last 3 to 5 weeks. So if the banks, for example, like this euro yen, uh, the banks have been selling that one pretty aggressively over the last 5 weeks. You can see that they've sold it to the tune of 76.6%. So they've sold so significantly. As they've sold, the euro yen has gone down. However, now that they've sold off so much, the euro yen is actually likely to receive a move to the upside soon. Because what happens here is as the banks sold, they now have these sell positions that they're going to need to close off and get rid of. And that could cause a short term move to the upside. Okay. And so that's what the crowd shift does is it basically says, hey, we're thinking maybe this week or within the next 2 weeks, something like that's the time frame of kind of how I would view the crowded shift alert is, hey, within the next 1 to 2 weeks, which to me is pretty short term, to be honest. Like that's a significant swing trading signal alert. It's basically saying, hey, there's going to be some kind of move in the counter direction to what the banks have done. Um, because by the time the banks have already moved the market 76% or 70%, like with the euro yen example, after they've sold so much over that period of time, in a way, you've kind of missed the move. And so we don't want to deep dive into the direction the banks are going, 3 weeks late, 5 weeks late into their move, right? So that's kind of what this does is it basically says, hey, just be on the lookout for reversals because um, these banks have already had their hoorah. They've already had their party going to the downside. So now you got to anticipate their move to the upside. Now, obviously, that's not the only thing that you're going to look at. You'd want to, if you really want to be smart about it, you'll include other metrics like the sentiment. You're going to include, the crowded market alerter if that's pertinent for the trade, or you're going to include maybe the 3 week shift and see where that's fitting in. And then lastly, you'll include your own price action skills. So when you go and look at the individual currency pairs and you find what those currency pairs have done on the charts themselves, if you find those breaks of structures, if you find those liquidity zones that match up with the signal direction, that might be a trade you want to take. You might want to put a limit order there. You might want to put a stop order there. Maybe you'll want to just take the trade at market if it looks good, right? This is going to help you a ton immensely in finding those trades that are often going to go in that particular direction. So this is, like I said, very, very helpful. Again, I would not be using this as a signal as far as like the day. I do see a lot of traders who come. This is like probably the biggest issue I see with the scanner. Um, uh, I see a lot of folks who come to the scanner and as like a actual day trader or intraday, like scalper type of mentality, where they see strong buy on, say, like the USD yen, and they hop into the USD yen long, thinking that by the morning it'll be successful. that's not a great way to trade the scanner. I mean, could it work? Yeah, there could be nights where you really capture a move, if that happens to be the night that it works out. But I would suspect, like, okay, hey, if it says strong buy right there, especially on this 5 week shift, and it's crowded as it says, then my guess is the USD yen over the next couple of weeks, could be this week, could be next week, will probably have a pretty significant rally to the upside. But it could be preceded by a move to the downside first. That's why I'm saying you can't just jump into a trade thinking that, oh, this is going to just work. There's got to be a little bit more logic and more thought put into those trades than just putting them in. Now you can do this. I will say that this is really, because I've back tested some of this work that I've done. Um, I went back and basically here's what I did. I basically went back and reviewed. This is actually how I knew to create this indicator. Is I went back in time and I looked at all of our past signal posts. Like I'd go back and look at the screenshots from each week and for the weekly trades, and I'd find the currency pairs with the biggest shifts. The biggest 5 week shifts and the biggest 3 week shifts. And what I would do is what I found was that the currency pairs that had the biggest 5 week shifts were usually the currency pairs that actually underperformed. Like they actually didn't do what the market said they would do. So those signals would wind up being unsuccessful. And I thought, well, it almost got me excited to see something consistently unsuccessful, because then that told me like, hey, I can just reverse this and do it the other way. I was like, oh, great. Well, that's easy. I'll take these trades, but I'll do it the opposite of what I was doing, type of thing. Um, Not exactly the opposite, of course, but I went out and just found like, hey, there's something here. Uh, I think there's something to this. And so as I kept looking, I found that, yeah, sure enough, you go back in time and find, the biggest shifts usually are overdue for some kind of reversal. Like you missed, it's almost like you missed, well, it is this way. You missed what the banks were doing. Like you didn't catch that move early enough. And so because of that, they're about to take those profits on the trades that they did take. And as they take those profits, it's going to cause the market to go essentially in the opposite direction of what they were doing. Right. And so I found this very consistently. I went back all the way back to January and found that this was pretty consistent. There were a few times where it didn't work out for the week, but by and large, if you were to take the highest 5 week shifts, the most biased ones, by and large, that if you went the opposite direction of those 5 week shifts, that actually proved to be highly successful.
Hey traders, it's Steve from the future. I hope you have enjoyed this video so far. If you are getting value out of this video, be sure to hit the like button, click the subscribe button, and share your trading thoughts. I read all the comments, so feel free to ask any questions you have there too. On a side note, I host live trading calls like this one you are watching every day. Some of my biggest trading secrets I share exclusively to just the members in my program. I host these live trading calls every day, Monday through Friday at 11 a.m. Eastern. I also host a basic training webinar every Monday for the newer traders, and the regular COT report and sentiment trading webinars every Wednesday night at 8 and 9 p.m. Eastern for the advanced and aspiring traders. All of these calls are recorded and promptly posted on the members' trading calendars at the conclusion of each call in case your schedule does not permit you to come to the live call. All of my members have complete access to the scanner. We call it Steve's Scanner. This is an institutional grade trade alert scanner that picks the direction of the week on all 28 major currency pairs and includes trading instruments like gold, silver, NAS 100, US 30. Just in the last 90 days, I have made over 3,000 pips just taking the top trade signals from the scanner at the beginning of the week and then just holding those trade alerts until Friday. If you want access to the scanner, you can start a 14-day free trial with the join link in the description to get started. Lastly, if you really want to be a full-fledged VIP member of my program to get access to things like the basic training course, live signals channel, Steve's scanner, trading calendars, and the one-on-one calls with me throughout the month, you can use code YouTube50, that's YouTube50, no spaces at checkout, and save $50 on your first month. Again, just click the link in the description below and apply that coupon to become a VIP member, and I look forward to helping you with your inevitable trading success going forward. Now, back to the video.
But it's kind of a tough thing too, because some weeks obviously it's not going to work. Nothing's 100%. So I wouldn't take it to the bank like, oh, this is going to be like I'm never going to lose again. That's not what this is, but definitely helpful. And then the other thing I was going to say too is you can let's oh shoot, what was I going to say? You've got the um yeah, basically I was just going to say the 5 week shift is like what I noticed. Oh, that's what I'm going to say. The 5 week shift was if you if you see a shift that is still like beneath a certain threshold. I don't know what that threshold is actually, but you can actually see these signals here. Like for example, these ones are here's the Euro Aussie is a 22% shift. It's just a buy signal. Here's the NAS 100 buy signal. Aussie Kiwi buy right now. Here's the Euro dollars buy. And then on the 3 week shift, you can also see kind of the same thing. Like here's the Euro dollar 3 week shift, general buy signal. Because these shifts are they're not really massive shifts, but they are, shifts that are noteworthy. And because those ones are not crowded, we use those ones to follow the banks. We're going to continue to follow the banks and what they're doing. It's only when they get overtly extreme in how much they've bought or how much they've sold where we get a little bit leery about wanting to continue to follow them. So it's a different kind of logic if you think about it, right? Like it's a logic of saying, "Hey, this is what the banks were doing, and obviously we want to follow them, but it looks like they're about to change." And so that's the key thing is you have to anticipate their moves before they even make it happen. Like to me, that's the most important indicator is no one really cares about what's already happened we want to know what's going to happen. That's where the money's made is, hey, what's going to happen next, right? And so that's where I feel like this indicator shines is it gives you intel on what's probably coming next and not so much about what's actually happened. So on the scanner, like for example, with sentiment is a indicator where it tells you where the retail traders are already standing, right? Like it's like, okay, retail is, 79% short on the pound Aussie. That's what's currently happening right now. And we're saying, generally speaking, because they're selling, we want to buy, right? Like from a general standpoint, that's what we're trying to do here. Okay. Now we've actually built into the scanner as well, like a sentiment crowded market. Not nothing huge, but basically you'll note here, like with the USD franc, this one is so biased. It's 91% to 9%, short, 91% long that we're actually trying to go against. We're actually trying to go with the retail traders now because they're so biased. They're so incredibly they've bought so much that this market um that they're like at this breaking point where now the banks will actually need to allow the retail traders to finally like essentially if they own all of the if there's no more money to be made by the banks because the retail traders have now bought everything, they've squeezed everybody into one corner, it now has to flip the other way. Okay, so now that it's flipping the other way, um, we're trying to identify that before it even happens. We're saying, hey, the USD franc might actually go up here soon, or the CAD franc might start going up here. And if the CAD franc goes up, then based off of where sentiment is, at least, then that means that maybe we should actually look for trades in that direction. Okay. And again, that's just one metric. There's more to the signal than just that. Like sentiment's obviously important, but you've also got like, the shifts and you've got the crowded markets that you got to look at too. Let me answer some of these questions. So Keith says, which chart are you watching for these possible trade changes? So the hourly is where I do most of my trades during the week. So I use the 15 minute for the overnight trades, and then the hourly is what I use for like price action signals, taking swing trades. Yeah, great question. Um, yep. Yeah, great. To me the hourly chart is the perfect time frame for the scanner. Yeah, that's actually a really good question. I should need to post that somewhere. Yeah, hourly time frame. It's what you use for the scanner. So, um, what other questions do you guys have? I've talked a lot. I pretty much talked for the last hour and a half nonstop. So maybe I'll slow down for a second and kind of gather my thoughts because there are some other things I wanted to. Oh, and I wanted to show you guys like some signals that I'm looking at from the scanner with these updates that I think we should be aware of. Um, and then get us into some potential trade opportunities because we have the time. Uh, oh, hey, Craig. Yeah, great to see you. It says, hey, Steve, quick question. Calculations on ADR and oil. Yes, let's do that. So with oil, like if you're going to take an oil trade, first of all, I'll show you how to do it. I do have a video on on the basic training library over here in the member section. I made one specifically for oil. So you have how to use a lot size calculator. This one's for forex pairs, and then right to the right here says how to use a lot size calculator oil edition. This would be a really good video to watch to answer your question, but I'll show you how to do it as well, just real briefly here. So um, basically, what you're going to do is you're going to, let's see, I think you can do it in the lot size calculator on our website. If not, I have another site you can use, but let's try to find um, WTI is what you'll search. And yeah, I got it right here. So you do WTI. Um, let's see, I do WTI USD. There you go. WTI USD is oil. And then you're going to put in your price. So if you're going to take like a weekly trade and you're just going to hop into the oil trade, because I think we have a signal on oil this week, if I recall, I think it's a sell. So what you would do is you would come in here to take your weekly trade and throw in the price of oil where you're getting in at. So if I pull up oil, let's do that together real quick. Oh, I forgot. I got to cancel these because I did this last hour with you guys and I don't want these trades to trigger. So I'm going to cancel all of this. There we go. Okay, so let's go to oil together. Oh, nice. And it's down pretty hard today. This is great. Sweet. That's going to be a good weekly trade. Um, oh, that's sick. That's awesome. So cool. So right here, you can see the current price of oil is 69.84 per barrel. So what you would do is if you were to take the sell from the scanner and just plug that in, just go, boom, I'm going to sell. You'll take that trade at market at 69.84, or now it's 69.85. So let's grab that number. Let's go here, 69.85. Um, Here it is, 69.85. 69.85. Then you put in your stop loss price. Now, this is the part that people stumble on, and this is probably why you're asking. Um, 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 Yeah, this is probably where you're going to get hung up the most. This is where most traders get hung up. It's like, what do you do for your stop loss price? Well, you actually have to measure this out because on the scanner, we actually provide for you what the pips are because pips are calculated differently on oil and like all of the CFDs. So like gold, silver, NAS 100, US 30, the ADR is like so out of whack. In fact, here they are. So here's oil. It says 508. You got gold at 5,500. NAS 100 at 6,200. Like it's crazy, right? But those are the numbers. Like they're not wrong. Like I want to confirm those are the correct numbers. Okay. So like with oil being 508. So what do you do with that number? So what you would do is you would actually come over here back to the chart and you would just measure with a measuring tool. You would go to oil and you would measure 508. So you'd actually go up 508. and you'd be like, okay, I'm gonna put my stop loss at as close as I can get to 508, which puts me like right. Well, that's there it is right there. 508 is 74.88. That's the price. That's where I would put my stop loss on oil for the week if I were just to take a plain old simple weekly trade. 508. Okay. Because that's the current price. And if I were to just hop in right now, five that would be it. So 74.80. Do you see how I did that? So I just took this, I'll do it again. So I just took the measuring tool just from the current price of the market and I went up until I got that to jive with 508. And then I just looked over to the right and saw, okay, that's the price, 74.84. Then I go back to the lot size calculator and put in 74.84, 74.84. And then if that's the amount of risk I wanted to take per trade, then I go ahead and click calculate. And then I think if you click this again, it's weird. You have to click it twice. This would be okay. So you got to be careful with this too. So I got to figure out what my broker does for lot sizing here. Um, it would be 50.1 contracts, but here, let me actually do this real quick with cashback forex because I want to make sure that those are the correct lot sizes. I think because your broker, you got this is it's so tough. You got to make sure you do this right because it can really mess up your account if you're not careful. I think that price we picked was 69.85, 69.85, and then the stop loss we determined was like 74.84, 84. And then this is $100,000 account. But calculate. Oh no, I think that maybe that is correct. Um, I think I had it correct. Yeah, 50.1. Yeah, so this is correct. Just double check with your broker to make sure that that is how. Um, so this is contract size units per lot. So an MT4 and MT5, right click a symbol and then click specification. The contract size field tells you how many units are in one lot. So each broker is different. So this is a broker thing. So you have to make sure that that is how a lot is calculated for that pair on your broker. And once you figure that out, if it is one, great. If it's not, then you'll want to change that number to whatever it is. So, and then this would be your lot size right there. And you can double check your numbers and make sure you did it. But there you go. That's how you trade oil, like as a weekly trade. Cool. Let's see. Let's look at some of these other questions. Keith says, so are you saying with the sentiment being high, we go with sentiment? Yeah, great question. So let's go back to the scanner. Um, so with sentiment, um, so I don't use sentiment as a standalone, typically like a standalone signal provider. Sentiment just gives us more insight into what's going on with the market and each currency pair, right? That's kind of how I view it. And sentiment basically is a contrarian indicator. So you generally want to go in the opposite direction of where sentiment is, right? So if like, for example, with oil right now, you got 89% of retail traders buying oil, right? And so right now we actually have a sell signal on oil because most retail is selling it or excuse me, buying it. So we have a opposite signal, contrarian, to go the other direction, right? Now, the only time that's different is when it gets to a breaking point. So, like if retail, like in the example of the USD franc, gets over 90%, which it is, I think that's the threshold that I chose. Anything between like 90 and 96, 97%, especially as you start to approach like 93 to 97%, those currency pairs are very much likely there's soon to be reversed. Okay. So if retail traders are going long, the market will actually finally go in their direction. Because if you think about it, with the USD franc right now, if most traders are long, that means the USD franc's been going down. I can almost guarantee the USD franc's going down. Without even looking at the chart, I can just tell you it's going down because 90% of retail traders are buying right now. So if 90% of retail traders are buying, then yeah, we just already know the price of the chart's going down. Now, when they get to like that 90% plus, especially 95% range where they're biased one way, that's when you actually no longer want to use it as a contrarian indicator. Because once retail gets fully enveloped in their buy position or fully enveloped into a sell position, um, then the market is more likely to finally go in the direction because it can't go that way forever. It can't like right now if it's going south, it's going to eventually have to reverse. And what's that going to retail traders are finally going to the few that were able to stay in will finally get the trade that they were hoping for, which will be to the upside. So that's what's beautiful about the sentiment is it's normally a way to detect what retail's doing, and then you just do the opposite of retail. Um, but that all changes. The only time that changes is when they get to this breaking point. And right now, there's only two currency pairs in that spot right now. I think it's the USD franc and well, actually, the CAD franc just flipped out on us, but CAD franc was just there a few moments ago. It was at 90% as well. And so, just while we've been talking, I think that signal changed. So it's been kind of on the border of that threshold, right? CAD franc has, but yeah, this USD franc is already there. So this is the only currency pair that we'd actually want to go the opposite direction of what, or no, we'd actually want to go with the retail traders. The only time is because they're now at a breaking point. So I hope that kind of makes sense. Okay, awesome. But great question, Keith. And let me know if I can rephrase that. But yeah, great question. Mohammed says, "Hi Steve. Any truth to most pairs are going to tank in September?" Yeah, it just depends on the pair, right? Some pairs are gonna light up. Like the Euro Aussie, that's one of our signals this week. It's been like this perfect move to the upside. You got the yen pairs have been all over the place. Like this week they started up and now they've gone down, right? I mean, so it's just kind of been everywhere. So I think there will be a lot of volatility in September, more so than we saw in August in Forex. So I'm excited for the volatility because volatility is what creates opportunities for us, especially with that overnight trading strategy. So I'm excited to see some pretty big moves in September. As far as our scanner goes, like there's going to be good and bad signals every week. There's going to be fantastic trades that just go from the beginning of the week to the end of the week. They were perfect. And there's going to be a few blunders. I mean, I'm going to do the best we can. I mean, I'm always improving, but we're going to try to do the best we can to eliminate all the losers, but I don't know if that's ever possible. I think I mentioned this morning, if you had taken the signals from last week because what I did is this weekend, I updated the scanner with the new updates. I didn't put in new data yet. So I put in the new updates and if with the old data, and I went back to plot the signals that were released with the new update first. And when I went to go take those signals as a test, there were 10 signals provided from the data from 2 weeks ago with the new update. And if you had taken nine of the or 10 of the 9 of the 10 trades would have been massively profitable with the new update. Um, and this week it actually started that way. It was like 8 of the 10 signals or 7 of the 9 were very successful. I think last I checked, I was closer to break even. Um, last I checked, but yeah, because some trades are up quite a bit right now and some are down. But like I said, the got a whole week. You got a whole week to see how these trades play out, and there's going to be opportunities to buy the dollar yen at different times. There's going to be opportunities to buy the euro Aussie like we've been doing. So it's going to be, there's basically the scanner is going to provide different times or not times. It's going to provide signals, but our job is to go find the currency pairs that make sense. Okay, let's see. Oh, you meant with indices. Oh yeah, I see what you're saying. Yeah, so yeah, I was kind of confused with the forex pairs. I was like, yeah, forex pairs. I mean, there's always going to be like half the pairs going up and half the pairs going down, like almost always. So that kind of confused me. But yeah, index funds. Yeah, I mean, September's not the greatest month for the markets. They're just not. So I expect crypto to go down this month. I expect index funds to go down this month. Um, yeah, so and for me, I'm mainly using it as a way to load up because contrary to, well, let's put it this way. I'm excited. I know a lot of people are kind of like nervous about the election. I'm looking forward to it as an investor. Like I'm excited for the opportunities that it's going to provide. Um, no matter who gets elected. I obviously have my own personal preferences, which I won't share, but like of who I'd like. But no matter what happens, like I'm excited for the opportunity. And so that's why I'm kind of I think a lot of people are kind of afraid to invest right now because they're like, oh, there's an election coming up. And I'm like, my investor mind is thinking like, hey, how can I participate? How can I buy crypto assets while they're low before the election? How can I go out and buy index funds before the Santa Claus rally this year? Right. So I kind of look at it like, hey, this is my month. The next 30 days or so is kind of my time to kind of go in and buy those discounts, and then write them out into the end of the year type of thing. That's how I view it. But as far as a trader goes, I don't do a lot of active day trading on index funds. Most of my trading income comes from Forex pairs. So that's mostly what I trade. But yeah, as an investor goes, like, yeah, the crypto assets will go down this month, and I just plan to dollar cost average daily into them. Index funds as well. Um, as an investor, not so much as a trader, though. Yeah, great questions. Okay, let me just show you guys before we wrap up here, some looks on the scanners. So obviously some of these are doing great. Like you got the U.S. oil, fantastic trade this week. Holy smokes! Like this was a great trade. Heck of a trade. This was a sell at the beginning of the week, and he is just falling off a cliff here. So really nice. So we'll see if that continues. Let's see. Is there any? Let's go out to this hourly time frame to see if there's any support out here. It'd be awesome to see gas prices drop. Yeah, it looks like you got some demand right in here, which we haven't quite gotten to yet. So oil could continue lower, actually. I could see that. There's even stuff beneath this, like back over here, that could get tapped into. So all of this is fair game on oil. And that's a sell this week, as you guys know. Wow, that's in free fall right now. Wow, that's crazy. I'd love to see it more at the pump. I watched this go down, but I don't really see it at the pump though. I'm like, hey guys, barrels cost of a barrel's gone down. Can we see it at the pump? That'd be nice. Like I'm like, hey, this this 350 $4 a gallon is not matching up with what I'm seeing on the barrels here. So, and I know they're not always like perfectly correlated. I get that, but anyway, there's my joke for you. Okay, so anyway, there you go. I think oil might continue down to these two levels right there. But let's continue on here. So the view I'm really focused on, this CAD Frank has been on my eye a lot. So this CAD Frank has had a really big shift positive over the last like 3 weeks. That's a really big 3 week shift. And so I've been thinking that that one may actually have a pullback here because of how big that shift is. Um, but we'll see. We'll see if it does. Maybe this doesn't. It's also on the cusp of being passed. Like right here, you can see on sentiment, it's at 89% long right now. So if that flips to 90, that's now technically passing the threshold as far as like retail traders being pigeonholed into this crowded market phase. And if that's the case, then you'd actually almost want to look for more buys on the CAD Frank. So that one, anyway, I'm generally leaning towards looking for sells on the CAD Frank. in the morning, I might take some trades with this with you guys. I may, or maybe I'll post one tonight. Just depends if I can find an entry I like. But yeah, I've been thinking that this one is going to be headed down. Um, but I could be wrong about that. But I just look at like some of these demand zones, like right here. We haven't tapped into this. Like that hasn't been tapped into, right? You got this right here that also hasn't been tapped into, just this one right here. And so I think the banks will try to get those before this CAD franc goes up. I do think it will eventually try to go back up, but I think it wants to get down to this or this first before you see that move to the upside. So that's why I've been like with the scanner looking like a sell and the fact that there's demand zones that haven't been tapped into yet. You can kind of see why I've been looking for the sell here. All right. All right. And then you've got I know they've been coming down quite a bit, but these like the USD yen is actually a pair I've been thinking that may have a move to the upside soon. Let's go look at it. I know it's been down like we talked about, but let me show you guys this. So this one has been so incredibly sold off by the banks, like so incredibly sold off that I think they're taking profits here. And I don't know if they're taking profits for like the next 2 months. That's what the crowded market is for. This is like the just crowded shift. I think the shift is overloaded, and I think that the banks are going to have to start to send this guy up for a brief period. And then I think, if they want to resume back to the downside, fine by me. But I think in the most immediate future, I think the USD yen may find a support here and start to rally to the upside. And I've got several reasons for that. Just from a price action standpoint, by looking at this, this morning I drew this out with you guys. This is on a 3 hour, but let me go back to the 1 hour with you guys. Um, I think this one's going to start to rally because you got a reverse head and shoulders here. We tapped into some demand that I think is going to help kind of bring this up. It has helped to bring this up. It's had a pullback here just in the last 24 hours, but that's really it. Like it's been up. You got two breaks of structures. You got this trend line break of structure here. You got this horizontal break of structure right here, reverse head and shoulders. Yeah, just to me, I think it's trying to gear up for I think it's trying to build a campaign to break up a little bit. And I don't know how far this is going to go. I don't think it's going to go forever, but I do think that it may try to come up and recoup something to like right there. Something into that area would make sense to me. Yeah, yeah, exactly. That's exactly what I was thinking. Maybe actually I'll bring this down just a little bit. I think this is where it wants to go, like right here. So that's where I want to go with the US. I'm just looking, that's all I'm looking for. When I look at the scanner and I look at that signal, when I look at the signal on the scanner and I see the strong buy and I see why it's a strong buy because of the incredible shifts we've experienced over the last 5 weeks. Um, to me, this is an indication that the USD yen may try to create some kind of rally out of here. Now, and again, I don't think it'll last forever. I think it's just going to come up to here and then I think you'll get a pretty gnarly move to the downside. So I do expect the USD yen to continue lower on the much longer term scale, like over the next couple of months. But I think this is going to try to make its move. I could be wrong. That's why we'll have to protect ourselves. So what I'll do, I think I might place a trade with you guys on this. It'd be more of a limit order or not limit, it'd be a stop order type of thing. I might do a buy stop right here or a buy stop right here and see if I can get that to go up. If it doesn't, if it wants to just collapse, fine. Just let it collapse and hopefully we don't trigger into it. So this is one that I'm interested in. I don't want to get too big into all the yen pairs because there are a lot of yen pairs on here, but that is probably my favorite yen pair right now. Um, um, yeah, I think that's probably my favorite yen pair. Another one, oh yeah, you guys already know the Euro Aussie has been an absolute bully here. This has been awesome. Like it's buys across the board except with the 3 week shift. Like the 5 week shifts a buy, long-term signals a buy, shift the sentiment signals buy, all for a strong buy signal. That's probably be that and oil has been like are pretty much our highlight right now. You go look at Euro Aussie, just absolutely amazing. Look at this guy. Oh, like the beginning of the week, this was right. This was the beginning of the week right here, and pretty much just been an absolute boss to the upside. That was a great trade to grab. Um, this could also be this could also be a trade that really winds up to be really good here. Let's see, we got a break in structure. Let me draw this out a little bit better. This is your. Oh, let me fix this. There, got to get 3 points of engagement. There we go. So there you go. There's this trend right here broke to the upside, and then as far as getting in again, if you wanted to buy the Euro Aussie again, you'd have to wait for it to pull back into some kind of demand. Um, which yeah, that's exactly where I was thinking, like kind of in this area right here would make sense. So you might be able to grab a little buy right there, type of thing. I might do that with you guys, and then we'll ride this up to here. Um, yeah, up to this zone. That would be great. Might be able to grab that trade as a price action signal. I'll either post that tonight or tomorrow. I'll post one of these. I got to get the price action trades going this week. I've been a little slow at that. Um, but yeah, that's a trade I've been looking at. Other than that, oh yeah, the USD CAD. That's another one. We talked about this one. It's kind of weird. I'm expecting kind of a short-term move to the upside on the USD CAD, but then ultimate move down. Um, and today it's actually, well, it's not done much right here. We'll see what it does. It's kind of just hanging out. And this is something we talked about this morning. Not a big fan of markets that hang out at supply. Like if it's just hanging out in this imbalanced supply zone. And so I would not feel too good about selling right there. I'm glad we got out of this trade. So I think the USD CAD could see a move to the upside that goes up and maybe even goes up to this area up here. Once it gets up to there, I'm going to move my sell stop order higher so I can get tripped in a little sooner. But once it's done, I expect the USD CAD to just fall off a cliff. And so that's what I'm here for, is trying to take advantage of that move to the downside. I don't want to trade the move up because I think the move to the downside makes the most sense. It's a crowded market signal. It's actually the most crowded market signal um, that we have. So the USD CAD over the next month or two will probably just be in the gutters. Like I don't even know. Probably down here is maybe down here, maybe even beneath. It could go lower than that. Who knows? But yeah, over the next couple of months, I expect this pair to just absolutely fall off. Just crash, 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 crash. But I don't think it's ready yet. So that's why I want to be cautious about just jumping in. I want to make sure that we get in when the time is right. So that's why I'm going to place this through a sell stop order. All right, guys, I think that's about it. I'm going to let you guys go. We'll meet up again in the morning. We'll look for some more trades, but I think this was a really good night. A lot of good calls today. Appreciate each one of you. Thank you for coming. Have a fantastic rest of your evening, and we'll see you guys in the next webinar.